Hello traders, welcome to Rooty Trade Hub. I am Godfrey, a professional Forex trader. In today's video, we'll be looking at currency pairs, okay? Now that you know what the Forex market is and kind of how it works, let's dive into breaking down the currency pair and give you a complete understanding of what a currency pair is. If you have not watched the video on what is Forex, kindly click on the link above to watch the video so you can flow with the class. So guys, welcome back to Rooty Trade Hub Forex Beginners Course. After the question of what is Forex, someone would ask what is traded in Forex. The simple answer is money, specifically currencies, okay? This is not your local market in any part of the world you are. In Forex market, what you are trading is called a currency pair, okay? Although commodities like gold, oil, silver are also traded in Forex, but for the purpose of this course, we'll pay attention to currencies or currency pair, right? Like I explained in my previous video, ensure you have watched it if you have not, okay? Forex trading is the buying of one currency while simultaneously selling another currency. These currencies expressed in pairs are always connected to each other. Basically, currency pairs are the main instruments traded in the Forex market, and the knowledge of the currency pair will also guide you in executing your orders, right? So let's head to the screen. Now, each currency has a standard 3-letter code. So the first thing you need to understand is what each 3-letter symbol represents which currency, okay? Know that currency symbols always have 3 letters, where the first 2 letters identify the name of the currency and the third letter identifies the name of that country's currency, usually the first letter of the currency's name, okay? Let's take JPY for instance. JP stands for Japan, okay, while the Y on the screen stands for yen. So the first 2 letters identify the name of the country, Japan, and the third letter identifies the name of the country's currency, yen, usually the first letter of the currency's name, which is the Y. All right. Then the next we take the NZD for instance. The NZ stands for New Zealand, while D stands for dollar, okay, which is the letter of the currency's, the first letter of the currency's name, dollar, okay. The price of the currency is usually a direct reflection of the market's opinion on the current and future health of its respective economy. Don't get confused yet, okay? You understand as we proceed. Now, in Forex trading, when you buy, say, the United States dollar, you are basically buying a share in the US economy, okay? You are betting that the US economy is doing well and will even get better as time goes. So let's take a look at this, okay? These are some of the list of major or popular currencies traded in the Forex market with their abbreviations and full meanings, okay? As you observe on your MT4, it's mostly written as their abbreviation, so you can familiarize yourself with these abbreviations so you do not get confused when you see them on your trading platform, right? Now remember, in the Forex market, currencies are traded in pairs, and they are often called what? Currency pairs, because they are traded in pairs. So what is a currency pair? Currency pairs are just that, individual currencies that are paired up. The currencies, like I said earlier, are traded in pairs as their value is relative to one another. The euro, for example, only has value if compared against the value of another currency like the US dollar, okay? That is why currencies are traded in pairs and not as single currency. So let's take a better look at the currency pairs and see which categories they belong to, okay? There are 3 main categories of currency pairs, right? Sorry. We have the major currency pairs, we have the minor currency pairs, we have the exotic currency pairs. The minor currency pairs can also be referred to as the crosses, okay? In some books you see them as the crosses, right? So if you look on the chart in front of you, each of these pairs are made up of separate currencies, right? The currencies included in the chart above are called the major currencies, okay? We have the Euro USD, we have the GBP USD, right? These currencies are traded in pairs. The euro is a single currency, USD is a single currency, that is the United States dollar is a single currency, and they both come together to make a pair. Okay, so they are referred to as the majors because they are the most widely traded ones and represent some of the world's largest economies. Okay, the majors are made up of the US dollar and one of the major non-US currencies such as the euro, the Japanese yen, and the British pound. So as you can see on the screen, these pairs have the USD as either the base or quote currency. Okay, don't panic. As we progress, we will understand the term base and quote currency. All right, to keep things simple, we just consider all 7 currencies as the majors. Okay, now we also have the crosses, right? The cross currency pairs. Okay, these cross currency pairs are any currency pair that doesn't feature the USD, and they do not hold any less profit potential than the majors, right? So as you can see, here are examples of some popular crosses, and these pairs do not contain the US dollars. You can see. Okay, we have the euro GBP. They do not feature the US dollar in the pair. The euro CHF and all of those, right? Remember when I was introducing the categories of these pairs, I said they are either called the minor or crosses. Okay, so these are the cross currency pairs or the minor currency pairs. So the next are exotic pairs. Okay, the exotic currency pairs are pairs consisting of one major currency and the currency of a developing country, and they are usually less traded. Okay, so these are examples of some exotic pairs. All right, we have the USD SGD, that is the Singapore dollar. We also have the USD HKD, which is the US dollars, and the Hong Kong dollars. Okay, so guys, there is another list of pairs that I did not outline when I was listing the categories of the currency pairs. Okay, these pairs are highly correlated to certain commodity prices. Okay, example of commodity pairs are the AUD USD, the USD CAD, the USD NZD, right? Generally speaking, the AUD USD and USD NZD correlates with gold prices, and the USD CAD, USD CAD correlates with oil. Okay, don't get confused about correlations. Okay, as we proceed, we'll have a course that will cover that. Okay, now with that being the case, if we have a currency pair, okay, say the euro USD, this is how you're always going to look at it. The first currency within the pair is called the base currency, while the second currency within the pair is called the quote currency. Okay, an important thing to note here is that the base currency is always stronger than the quote currency, with few exceptions. Okay, there are occasions in which the second currency are written as the second pair, right? The examples include the NZD USD. Okay, in this pair, US dollar is stronger than New Zealand dollar, right? And in the second example, the euro GBP, okay, pound is stronger than euro. Now when you see these few exceptions, don't bother too much about why the weaker one is written first, even though it's quite glaring that the quote currency is stronger than the base currency. What you just have to do is to take note of them. Okay, it doesn't affect your trade, it's just for the knowledge sake. So euro USD in this example, euro is the base, right, while USD is the quote because the euro is stronger than the USD. Also, in your MT4 or trading view, beside each of these pairs, you will see some set of numbers written by the side like this. The actual quote you see on the screen is your quote pair. Okay, now while the base pair is equal to 1. Now from what we have here, okay, this implies that 1 euro is worth 1.0609 US dollars. Okay, the USD here is the quote currency, while the euro is the base, which is equal to 1. Now let's head to the chart and take a practical look at what I am talking about. Okay, as you can see here, the euro dollar has a value of 1.0609, Now that is the quote pair valuation of the value compared to the base currency. Okay, that number is telling you how many units of the quote currency you would need to get 1 unit of the base currency. Now don't let this sound too confusing. Okay, one thing you need to know about a currency pair is that every base pair, as in the first pair in a currency pair, always have a value equal to 1. What this means is that if I have €1, I essentially have $1.0609. Another way to look at this is it takes 1.0609 USD to make €1. Okay, so let's take a look at one more pair and try to go over this one more time to make sure that you are getting it. Okay, and I'll ask you some questions while I do this to help you to better learn. So let's go for the dollar yen. Okay, so the US dollar with the Japanese yen, which one of these pairs is a base pair? Is it the dollar or the yen? Let me know in the comment section. Hopefully you said the dollar, right? With the dollar being the first pair in the equation, that means it is the base currency of this currency pair, and the yen will be the second pair in the pair. Now with the USD being the base currency of this pair, its value will be equal to 1, and the quote pair value will be 132.06. Okay, and let's take a quick look at this on the chart. On the chart here, the yen has a value of 132.06. Okay, this means that 132.06 yen is equal to $1, or you would need 132.06 Japanese yen to be able to obtain $1 US. Okay, another thing you need to know is that the first currency or the base currency is the controlling one in terms of placing your order. So if you see USD JPY, then you are always choosing to buy or sell the first currency USD against the second currency, the JPY. Okay, the knowledge of the currency pair will also guide you in executing your orders. For instance, buying a currency pair is the same as buying the base currency while simultaneously shorting or selling the quote currency. By the same token, selling short a currency pair is the same as selling short the base currency while simultaneously buying the quote currency. This implies that if you think that the base currency will go up in relative value while the quote currency will go down in relative value, then you should buy the currency pair. If instead you think that the base currency will go down in relative value while the quote currency will go up in relative value, then you should sell or short the currency pair. Okay, so guys, that was a quick overview of currency pairs and how they work. I hope this video has helped you understand currency pairs and how they fit into the picture. I'll see you guys in the next lesson where I'll be talking about important Forex tools you need to begin your journey as a profitable Forex trader. Hit the subscribe button now so you don't miss out when I post a new video. Thank you for watching. Click on the like button if you got value, and don't forget to subscribe and share this video to your friends to get connected to it.